Could you please confirm that you can hear me and see me?
Yes.
Okay, great. Ladies and gentlemen, before we start, I would like to thank you for having come to my lecture. Unfortunately, to my surprise, the timing for today is 9:30, so we start pretty early, and I'm really grateful for your decision to come to this lecture at this early time. Well, guys, today we have our final lecture. And wait a moment till I share my screen. Mhm. Just a moment, guys. Looks like there is a technical problem. Okay. Okay. Guys, do you see my screen?
Yes.
Okay, great. So, ladies and gentlemen, today we will proceed to the problem of digital finance. Actually, we have started discussing this topic last time when we analyzed the phenomenon of cryptocurrencies. Today we will generalize our approach to this, and we will try to study the digital finance as a whole, so as a complex industry, as an independent part of the current financial sector. So, ladies and gentlemen, what is digital finance? How we can describe it? Digital finance can be described as the use of digital technologies in order to increase the efficiency of financial services. Obviously, this definition is very, very general, but here you see in brackets some examples. The first example are neobanks. Ladies and gentlemen, have you ever heard about neobanks? Do you understand what is it? Guys, any ideas?
Actually, no.
Actually, no. Okay, neobanks. Okay, neo, as you understand, is from Greek new. New banks, literally. What does it mean? Digital banks, virtual banks. The Russian Tinkoff Bank is a good example. A neobank is a bank which provides its services via internet only. This bank has no physical outlets. It has no physical representation in the real world, so to say. It exists just in the virtual space. All services are provided via this bank's website or via its app. Obviously, the number of personnel is reduced in comparison with traditional banks, and obviously, such banks have a greater coverage, have a greater geographical coverage in comparison with traditional banks, because okay, any customer can reach this bank via internet. So Tinkoff is a good example of such a bank in case of Russia. Obviously, Tinkoff is not the only bank because in most countries such banks do exist. But as I have already said, Tinkoff is a very known example in case of Russia. We have analyzed cryptocurrencies as a second example. Okay, what is the goal of cryptocurrencies? The goal of cryptocurrencies is to cure the inefficiencies of traditional currencies. So, to eliminate the impact of the central agent and to help people to avoid control from this central agent. Crowdfunding, guys. Okay, I guess you have heard about this phenomenon, but maybe someone can provide us with a definition. ladies and gentlemen, what crowdfunding is. Guys, please try to participate.
I was talking about crowdfunding in my presentation about protests. It's like um, the technology when you use the internet and social networks to find the capital when you have a lot of investors. I don't know, hundreds or even thousands of people.
Mm-hmm. Okay, in this case, what do you do? Crowdfunding. You can easily understand the origin of this word. Crowd plus funding. So it is funding provided by a crowd, by a lot of people whom you don't know about, which you are not acquainted with, but okay, who are ready to support your project. You inform these people, you inform actually a crowd, a large audience of potential customers about your project via internet. Different tools can be used, social networks, crowdfunding platforms, your own website, etc. And you invite this crowd, so to say, this audience, to finance your project. Okay, that's it. So, crowdfunding used to support different projects when you cannot get access to traditional sources of finance. Ladies and gentlemen, another term can be used to describe the digital finance. FinTech, financial technologies. Probably you have heard about it. I'm not sure because FinTech, it is a term which is very popular now. It describes the digital transformation of the finance, but well, it is less known among the large audience, so to say. So fintech or financial technologies is a general description, so to say, of the digital finance, of the digital part of the financial industry. Okay. I would like to highlight that fintech, the term fintech, can be used to describe new technological financial companies. Companies that rely on the use of digital technologies in the business. So, fintech has actually two meanings. Fintech as the digital finance in general, a fintech as a company which works in the field of digital finance. So, let's go back to Tinkoff, our example we have just analyzed. Tinkoff is an example of fintech. Okay. Ladies and gentlemen, before we go further, I would like to analyze the phenomenon of crowdfunding. I have already given you a general definition of this term, of this phenomenon. Here you see a more technical definition. In this case, we can see that crowdfunding is a practice of funding a project or venture by raising small amounts of money, actually really small amounts of money, from a large number of people, typically via internet. Okay, typically, guys. Now, obviously, most social contacts, most economical contacts are organized via internet. But crowdfunding is a historical phenomenon. So technically, you can organize crowdfunding without using internet. But obviously, in this case, your expenses will be higher, and the number of people you contact will be lower. So in this case, a large number of people, a huge crowd actually, gives you small amounts of money. It's pretty obvious. If each, okay, let's imagine, you contact, I don't know, 10,000 persons. Each person gives you just 100 rubles. Okay, 100 rubles is not a big amount of money actually. It is a little bit more than $1. But okay, in case you multiply this amount of money by 10,000 persons, as I have already said, okay, in this case, you get how much? You get 1 million rubles, which is a pretty big amount of money that can be used to start a small business or a small project. Ladies and gentlemen, do you understand the difference between a project or a venture? Which is, okay, we have these two terms in the first line of this definition. I kindly ask you to think over this difference. A project or venture, what is it? What does it mean? Ladies and gentlemen. Guys, do you hear me?
Yes, no idea.
Okay, actually a project, or what is it? It is a actually okay. I will repeat it. It is a project, so it is an event, an idea, which will be carved out just once. So you can shoot a movie. Why not? But it is a project. You can organize an event. I don't know, a festival. I don't know. Okay, I don't know, a conference, etc. It is a project. So a project, it is a concept which is carried out just once. It is a precise it is a date of beginning and a precise date of end. In case of venture, it is a business project which will last for a pretty long period of time. So a venture, it is a business. It is a business, not necessarily a commercial business or a for-profit business, but okay, it is a venture, so I will repeat it, which will last a pretty long period of time. Obviously, it will have a precise date of beginning, but no final date. So it will last a long period of time. So shooting a movie is a project. So setting up a new business is a venture. Okay. Ladies and gentlemen, what are the different types of crowdfunding? I guess you have heard about them, but let's repeat just to understand the difference between them. The first type of crowdfunding is the donation crowdfunding. Ladies and gentlemen, do you understand what is it? Donation crowdfunding. What is it?
Yeah.
What is it? Could you please help us?
When you voluntarily pay any amount of money to the person who organizes this process.
Well, and in all cases of crowdfunding, you pay a given amount of money to a person or to an organization which organizes this event or a venture. But what is the typical feature of donation crowdfunding?
Well,
Any,
maybe the thing that you don't have to pay, I don't know, exactly some of money, I don't know,
not
and not in the period of some time.
Not exactly. I will help you a little bit. The key word in this case is donation. Donation crowdfunding means that you pay some money to a person or to an organization, but you don't expect any compensation. You just give your money out without any compensation. You just support a project, you just support a person, you just support a venture, but well, you don't expect any compensation back. So in this case, you just donate your money. In case of rewards crowdfunding, the situation is different. In case of rewards crowdfunding, you expect a reward. Okay, indeed, you give some money, but you expect that the person or the organization you financed will give you a reward, a compensation in the future. Technically, it is a kind of pre-sale in most cases. So let's imagine an organization plans to develop a game, for example, a computer game. Why not? And obviously, it needs finance to develop this project, this concept. Okay, it asks its audience to support this game on the basis of reverse crowdfunding. The audience is happy to give money, and what will be a reward in this case? For example, an extended version of the game. So you give some amount of money. Normally, this amount of money will be fixed in this case, and as soon as the development of the game is finished, you will get, as a compensation, a developed version of this game, an extended version of this game. All other customers will be able just to buy a regular version of this game. So it is a reward. You get a compensation for your finance. It is a game, and it is a very good compensation because you get an extended version of the game. So it is a pre-sale, as you understand it, because you give some money in advance before the game is created, but you will be able to get the product of this project in the future. Guys, do you understand it, ladies and gentlemen?
Yes.
Okay. What about debt crowdfunding? Okay, it is a purely financial relation between the backers. Persons who provide finance are called backers in case of crowdfunding. Okay, it is a purely financial relation between backers and the project or the venture they finance. In this case, crowdfunding represents just a debt. You give money to a project and you expect that this money will be paid back to you, probably with some interest. So in this case, it is just a kind of debt finance. You provide a debt to the organization, and you expect that this debt will be paid back. Royalty crowdfunding, guys, it is a very interesting case. In this case, you support the project financially, and you expect that this project will pay you a royalty during the whole period of existence of this project, of this venture, more precisely. So let's imagine you gave, I don't know, 1,000 rubles to a project, and you expect that during the whole existence of this venture, a share of the net profit of this project will be paid back to you. So you participate in profits of this project. Okay, why not? It is a very good idea. It is a very good idea. In this case, the project you support doesn't have to pay back the whole amount of the debt, which would be the case for debt crowdfunding, but still you have a hope, so to say, to get good income thanks to the profits of this project. Guys, do you understand this model?
Yes.
Okay, and equity crowdfunding, what is it? Okay, ladies and gentlemen, in this case, okay, you become a kind of shareholder of the project. So you become a co-owner of the project. Actually, in this case, you buy a share in the project. Well, you become a co-owner of the project, and you get the right to get dividends in case this project is successful. So, as you see, um, these models of finance have analogs in the traditional finance. Donation crowdfunding, what is it? Okay, it is a kind of donation. Rewards crowdfunding, it is a kind of pre-sale, so you pay in advance and you expect to get a product in the future. Debt crowdfunding is very similar to bonds issuance, a bond, a debt actually, a collective debt. Equity crowdfunding is very similar to IPO, if you have heard this term. So in this case, a company invites potential external co-owners to finance the project. But the royalty crowdfunding has no analog. In this case, you participate in future profits of the project without having the right of co-ownership. So as you see, crowdfunding is a very flexible model. Is a very flexible model of finance. It can use different models of compensation of backers, which is very good. And ladies and gentlemen, what I would like to highlight: if you decide to support, okay, no, not exactly. If you decide to develop your own business on the basis of crowdfunding, you should know that almost all these models can be combined with the same crowdfunding project. I know a team here in St. Petersburg which set up a dance studio on the basis of crowdfunding. So the project was carried out on the basis of crowdfunding only. They had no other sources of finance. And they used two models of crowdfunding: donation crowdfunding and reverse crowdfunding. What did they do? They announced that if your support is below a given amount of money, it will be considered just a donation. So you give your money without any compensation. You just like a project that you supported. That's all. But if your support, if your participation, if your financial participation in the project exceeds this amount of money, okay, in this case, you have the right to get a reward. What is a reward? The right to use the services of this dance studio. Obviously, the amount of services depends on the amount you give to the project. So a combination of this donation crowdfunding and rewards crowdfunding was pretty good. And people actually supported this project, and the project was carried out. It came into real life. Guys, do you understand it?
Yes. Yes.
Okay. So you should clearly understand that in case of crowdfunding, you can use a combination of different models of compensation of your backers. Well, let's go further. Ladies and gentlemen, what are the advantages of crowdfunding and disadvantages, obviously, from the point of view of companies or projects that seek finance. First of all, it is easy to use. In case you use official, so to say, traditional institutional models of finance like bank credit or IPO or bonds, okay, you have to fulfill a lot of formalities. In case of crowdfunding, it is not so. You just inform your potential audience that you are interested in getting finance. That's all. Obviously, you have to make your audience interested in your project. But it's a kind of promotion. It is a kind of marketing. It is kind of relationships. But there are no formalities you have to fulfill. It is pretty good, and it greatly simplifies the process of getting money. What else? There are no legal regulation. It is actually it goes together with the first point. No legal regulation, no formalities. Pretty good. Possibility to get funds for projects that would not be approved by traditional financial institutions. Indeed, it is so. Some projects cannot get money from traditional sources of finance due to the unclear financial prospects of these projects, due to the early stage of finance, etc. For example, let's go back to my example of a dance studio. Okay, a dance studio is a pretty doubtful, I would say, project. It is designed for a young audience, and nobody knows that this project is successful. So a bank will not give a credit for this project. Okay, but the audience supported this project itself. Market survey. Ladies and gentlemen, what does it mean? Uh, let's imagine you want to start a project, you or venture. Okay, you suppose that you will use crowdfunding to get finance for this project. Okay, you inform your potential audience about your intention to start this project, and you invite your audience to finance this venture. Okay, ladies and gentlemen, it is a very simple and very cruel, so to say. If your project is supported by your audience, it means that your audience is interested by your project, that it will use your services in the future. So you get if an implicit feedback from your audience. You see that your audience is ready to participate in this project. In case you are not able to get finance, okay, it means that your audience implicitly informs you that it shows no interest in participation in a project, and probably your project should be closed down. Okay, and reputation, guys. Crowdfunding is a public project. It is a public phenomenon because you have to inform your audience, you have to inform your potential backers, you have to advertise your project, you have to stay in contact with your audience. And okay, in case your project is successful, it will help you to build a reputation, which is very good. It will be a part of your immaterial capital. Great, just great. What are disadvantages? No legal regulation. What does it mean? The rights of backers are not protected. Neither, neither are yours. So, in case there is a problem between backers and the project, it will be very difficult to solve this problem. And obviously, no guarantees. What does it mean? Okay, backers have no guarantees that the project will fulfill its obligations, that it will indeed deliver rewards, that it will indeed pay debt back, etc. So it is pretty risky from the point of view of backers. So, and obviously, it should be based on trust. So, if your audience believes you, in this case, you will be able to get finance. In case you fail to build this trust, okay, there will be no finance from your audience. But again, ladies and gentlemen, what I would like to repeat, even if you manage to get finance, your backers have no guarantees you fulfill your obligations until you actually fulfill them. So if you support a project as backers, please be careful about it. Guys, do you understand it?
Yes.
Okay, great. Let's continue. Ladies and gentlemen, as I have already said at the beginning of this lecture, crowdfunding is mostly organized via internet. It can be organized via your own website, but not necessarily. In most cases, crowdfunding is organized via special platforms, crowdfunding platforms. Uh, a platform, we have already discussed it during our first lecture. A platform is a space where different users meet and provide services or resources to each other. Uber, for example, is a platform. On this platform, passengers and drivers meet. Airbnb is a platform, but crowdfunding sites are also platforms. On these platforms, potential backers and potential initiators of projects meet. There are several examples of such platforms. In Russia, we can indicate Planeta and Boomstarter. At the global level, as you probably know, the most known crowdfunding platforms are Kickstarter and Indiegogo. So, um, what do platforms do? They set up, as I have already said, a space for direct interactions between users and providers of financial services or financial resources. In case of crowdfunding platforms, they establish a space so that potential backers and potential initiators of projects could interact. They set up rules of these interactions. So, for example, they indicate what information should initiators of projects give. They set up rules of payments, etc. And obviously, they ensure control of these interactions. So they help to build trust between users. Ladies and gentlemen, you should clearly understand that platforms are necessary. Crowdfunding platforms, they are necessary to organize crowdfunding because they have an audience of potential backers, and okay, they are very good to promote your projects among this audience. Well, let's continue. Ladies and gentlemen, what about financial platforms? I would like to tell that there is a difference between crowd-based models and P2P, person-to-person or peer-to-peer based models. You probably have heard about okay, we have already discussed the crowd-based models. It is crowdfunding, indeed. And I'm sure you have heard about P2P based models. In this case, a person interacts with another person. Okay, torrents are a good example of P2P interaction. What should we differentiate in case of financial platforms? In case of crowd-based models, sorry, the necessary amount of money is obtained from many money owners, from many backers. There are no examples when a crowdfunding project is fully financed by one person. In case of P2P based models, the necessary amount is obtained from one person. There is obviously a mistake on the slide, from one person. So in this case, we have direct interactions between two persons. For example, a person informs that it would like to borrow money, and another person says, well, okay, I will give you the full amount of money. It is also possible. But well, again, guys, please differentiate between crowd-based models, in this case, a finances your project, and P2P based models. In this case, we have P2P interactions between different users. Guys, do you understand it?
Yes.
Okay, great. So let's continue. Ladies and gentlemen, let's go back to the digital finance in general. Okay, what is FinTech ecosystem? It is a complex of different companies, organizations, and institutions which support the existence of this digital finance. What is the composition of this FinTech ecosystem? I will give you just a list. Each point in this list will be discussed further. Now, please just try to remember this composition. Okay, first of all, we have FinTech startups. Financial technological companies which promote new financial digital projects. Okay, Tinkoff, okay, 10 years ago, obviously, was an example of such a fintech startup. Technological companies, what do? They develop technological solutions for financial industry. For example, we have analyzed this problem during one of our previous lectures. Technological companies may develop technologies of authentication. Probably you remember it, biometrical authentication. Okay, it is not exactly a financial product, but it is crucial for development of digital financial projects. So these technological companies also support the digital finance ecosystem. Traditional financial institutions, obviously, they also participate in this ecosystem. Financial customers, all types of customers, debtors, owners of money, etc. So all potential customers of financial services. Non-financial institutions, guys, we don't have to forget about them. Because non-financial institutions also provide support to other members of fintech ecosystem. And the state, obviously, the state as a regulator, plays a huge part in the existence of this fintech ecosystem. So let's continue. Fintech startups. So what do? They provide innovation-based services. For example, payment services. Ladies and gentlemen, there is a lot of new companies which provide payment services, just sending money, at a lower cost than traditional companies actually. So, for example, Google Pay is an example of such a startup actually, of such a project. Crowdfinance, we have already discussed it. Crowdfunding, it is a general term. Some specific examples of crowdfunding are equity crowdfunding or crowd lending. Crowd lending, guys, it is a synonym for the debt crowdfunding. Wealth management, what is it? In case of wealth management, a company provides you a service in the field of managing your assets actually. So it helps you to invest your assets to get a higher rate of return for your assets, etc. Obviously, this management should be based nowadays on digital technologies and insurtech. It is about implementation of digital technologies in insurance. For example, adaptations of payments to the level of risks of each person. Okay, it is a pretty important technology because it helps to balance the risks and the payments. Okay, technological companies. What do they do? As I have already said, they develop new technologies that are necessary for what? How should I say? For the existence of this new digital finance. For example, big data analytics. Okay, big data analytics. Why it is important? Obviously, each bank, both technological, digital, or traditional, they are interested in getting information about their customers. Cloud computing. Ladies and gentlemen, we have already discussed this problem again. Now, it is very difficult to have all necessary computing capacities within one organization. In most cases, you will have to contact providers of cloud computing, cloud storage, in order to process and to store your information. Robo-advising, what is it? Ladies and gentlemen, do you have any idea what is it? Robo-advising.
Some help from robots, I don't know. Some using robots in development of the technologies.
Not exactly. Not exactly. It is indeed about robots. You're absolutely right. But what is it actually? In case of robo-advising, you use robots to provide your customers with information on optimal investment decisions. So normally, such recommendations are being done by consultants, by professional financial consultants. But now, for large public, as you know, on developed markets, there is a lot of small investors. Okay, it would be extremely expensive to use financial consultants to provide these investors with such information. So robo-advising, what is it? It is using big data analytics for market analysis, and it is a development of recommendations for investors how they should invest their money. So no financial consultants participate in such advising, but investors do get recommendations they need for investment of their funds. Guys, do you understand it?
Yes.
Okay. So it is about technologies. So in the what is robo advising actually, guys? Again, it is not a financial service itself, but okay. Robo advising, it is very important support for financial companies. Thanks to robo advising, they can support small investors in the field of optimal investment decisions. And such products, such technological projects are developed by technological companies, obviously. Traditional financial institutions. Ladies and gentlemen, you should probably know that there is a lot of different types of traditional financial institutions. Here we have just a short list. First of all, I would like to name banks. Okay, obviously, traditional probably most powerful financial institution. We have insurance companies. Guys, do you understand what is insurance? Do you know what is it? Guys,
Yes.
could you please explain us a little bit?
It's when you're paying some money to be safe. Mm, in some cases, you pay money
Uh-huh.
to get it back when something happens, something occasionally happens.
Nikolai, thank you very much. You're absolutely right. I will develop your idea a little bit further in order to give a more complete picture of the situation. So what do we have in case of insurance companies? Okay, in case of insurance companies, you as a customer transfer your risks to this insurance company for a price. So, insurance companies are ready to pay your risks, are ready to take your risks, sorry, for a price. So let's imagine you have an asset which costs, I don't know, 1 million rubles. So let's, okay, a car probably. You are not sure about your driving capacities. You are not sure about the security of your car because you park it just on the street, etc. So you would like to protect your car against different risks. What do you do in this case? You go to the you go to an insurance company, and you pay an amount of money to this company. Let's say 100,000 rubles. So 1/10 of the total price of your car, 10% of the price of your car. If okay, normally such insurance contracts are concluded for a given period of time. Let's say for 1 year. So if during this period of time, if during 1 year something happens to your car, it is okay, it is broken, okay, I don't know, it is destroyed by bandits, it is destroyed after an accident, etc. Okay, this insurance company will pay the whole price of the car to you. So it is again it is a protection of your assets against risks. You transfer your risks to an insurance company, but obviously for a price. Ladies and gentlemen, do you understand it?
Yes.
Okay, great. What is stock brokerage, ladies and gentlemen? Okay, stocks or shares are used here to describe okay, different immaterial assets which are sold on stock exchanges. So stock brokerage is a service thanks to which you can sell and use different assets. Okay, you are not a professional investor, so you just authorize a company to sell and buy stocks or bonds or other valuable products for you. Or as you probably know, even if you are a professional investor, you may not have access to the stock exchange. In this case, a stock brokerage company will also ensure this service for you. Venture capitalists, guys, do you understand what is it? A venture capitalist. It is a very important part of the financial infrastructure of the economy. But do you understand the meaning of this term, venture capitalists?
Not exactly. Can you explain?
Okay, I will try. Ladies and gentlemen, as you understand, probably banks in most cases will support existing companies. Because if a company already exists, it is a clear picture of its future, at least more or less clear picture. It is clear how this company will be able to pay the debt back, etc. But let's imagine you are just starting a new project. You want to develop a new idea. You need to create a new business, but you have no idea how it will exist. And which is more important, you don't just copy an existing business. Okay, everybody opens shawarma kiosks, so you want to start a new shawarma kiosk in a new area. Okay, it is not exactly the business of venture capitalists. Let's imagine you want to develop a new app for learning, I don't know, for neuromarketing, for example. You want to develop a new medicine against an important illness, etc. For example, against coronavirus. Okay, pretty hot topic. Okay, in this case, nobody knows if your idea is successful because you have to develop your product. You have to demonstrate that this product will be popular, etc. In this case, no bank will support your project because there is no clear future for your product. And in this case, venture capitalists will help you. Venture capitalists are investors which support risky ventures, innovative ventures, ventures that can fail, but that also able to get a huge rate of return. So venture capitalists support new, risky, innovative projects, IT projects, biotech projects, ecological projects, green energy projects, etc. So they are here to support new, risky, innovative, important business. Guys, do you understand it?
Yes, now it's clear.
Okay, great. They play a very important role, as I have already said, in the financial infrastructure because, okay, they help to emerge, okay, they support emergence of new businesses, of new industries, etc. Okay, financial customers, guys, okay, it's pretty easy to understand. Individuals like we or organizations. Let's stop here. Non-financial institutions, ladies and gentlemen, it is very, very important to understand it. Non-financial institutions are also interested in finance. Here we have some examples. Retailers, okay, Пятерочка, Lenta, or for example, AliExpress, also a retailing company. Telecom operators like Megaphone, social networks, etc. Okay, obviously, these non-financial institutions are customers for financial services because they need debts, etc. But ladies and gentlemen, as you understand, such companies have a huge audience. Let's go back to AliExpress, for example, or to Walmart in America. Well, these companies, these companies these companies may also wish to provide financial services to their customers. Let's go back to Ozon. As you know, Ozon is one of the biggest internet retailers here in Russia. Okay, as you know, Ozon now has an option to sell products in credit. But obviously, guys, it is a financial service. Obviously, this service is used to support the core business of Ozon, sales, retail sales. But still, we should understand that Ozon offers financial services. So non-financial institutions may also start providing financial services. The same is true for telecom operators. As you know, Megaphone and MTS and Beeline, all the big three of our Russian telecom market, all of them provide financial services to their customers. So, what is it, guys? It is very simple. These companies have a huge audience, indeed. They are interested in the development of their core business, like retailers, or they are simply interested in increasing the profits, and they add financial services to their range of products and services. Guys, you understand it?
Yes.
Ladies and gentlemen. Okay. So, government. Okay. Here in Russia, it is very important, but not only in Russia, obviously. Okay. What is the role of government in the development of the fintech market? First of all, we have direct participation, financial regulation and legislation. So, government creates the legal framework for the existence of digital finance. But, ladies and gentlemen, there is also indirect participation. Government can shape financial environment by setting up state-owned and state-controlled financial institutions. For example, here in Russia, we have a central bank financial marketplace where financial services are provided. As you probably know, our central bank, the Central Bank of Russia, set up a system of SWIFT payments. This system of SWIFT payment is used to replace other systems of payments used in Russia. In addition to the direct participation, which is regulation, the state, via its institutions, may shape the financial infrastructure by creating new financial products and services. Ladies and gentlemen, here we have a schematic description of the digital finance, of the main actors of fintech market. We have traditional companies and we have non-traditional companies. So traditional companies are companies which emerged before the technological revolution, and non-traditional companies are digital companies, are companies based on the extensive use of digital technologies. And we also have financial companies and non-financial companies. Well, ladies and gentlemen, the first example is traditional companies in the financial sphere, like Sberbank. Okay, it's pretty obvious. But we also have non-traditional digital companies which are also present in the financial, which work in the financial industry, which are specialized in finance. Okay, we have Tinkoff, for example, or Kickstarter. Tinkoff is a digital bank, a neobank, as I have already said, and Kickstarter is a crowdfunding platform, an international crowdfunding platform, which is used to support different projects and ventures. We have non-financial companies. A traditional company would be Samsung, but okay, as you know, Samsung provides us with payment services. And non-traditional, non-financial companies are what? It can be exemplified by VKontakte, the biggest Russian social network. As you probably know, guys, this social network is now offering financial services. So you can send payments via VKontakte. You can obviously receive payment. You can start a crowdfunding campaign of VKontakte, etc. So this platform, this social platform is also active on the financial market. So, ladies and gentlemen, what can we say? What can we say? In addition to the financial companies, both traditional and digital, non-traditional, there are now new players on the fintech market. Even non-financial companies are entering the financial market, like Samsung or VKontakte. All companies are now trying to offer financial services. What does it mean, guys? It is very simple. Each company is now interested in building its ecosystem. We have already discussed it during our first lectures. And okay, obviously, financial services should be a very important part of this ecosystem. In order to provide your customers with a full range of products and services, you should be able to support them by financial infrastructure. So almost all companies are now providing their customers with financial services. Guys, do you understand it, ladies and gentlemen?
Yeah.
Okay,
Yes.
great.
Yes.
Okay, great. I will. Sorry, guys, just a moment. Okay, Alexander Bocharov, I've just got your question via our chat. I hope I have answered your question. Have I?
Yeah, thank you.
Okay. Okay, so ladies and gentlemen, traditional financial institutions, why do they implement digital technologies? Obviously, they are interested in increasing their efficiency in the field of traditional financial products. It is, first of all, the reduction of transaction costs. Ladies and gentlemen, do you understand what are transaction costs?
Yes.
Asilbek, could you please explain?
It is a certain percent of expenses which is incurred in case if we transfer certain amount of money from one bank or from one person to another.
Okay, technically you're absolutely right, but I will give a more general description of transaction costs. Okay, transaction costs, ladies and gentlemen, it is a cost of transaction, obviously. So in order to perform a transaction, a business transaction, a commercial transaction, a financial transaction, etc., you have to incur some costs. For example, let's imagine you want to go, okay, I don't know, you live here in St. Petersburg at Nevsky Prospect, okay, pretty good location, and you want to buy food, okay, very good decision, especially if you have a big family. Let's imagine you have a big family. So in case you have a big family, you need to buy a lot of food, obviously, and a lot of other products. So you decide to go to a big hypermarket, let's say to Lenta. Lenta, I will explain to our foreign colleagues, it is a very important brand of hypermarkets here in Russia. So you go to Lenta, which is located, let's say, in 10 kilometers from your home. Okay, 10 kilometers one way, 10 kilometers back. Here we have, okay, in total, we have 20 kilometers. And obviously you have to pay for fuel, for parking, etc. And obviously you have to spend some time traveling from your flat to this hypermarket. All these costs are transaction costs. Actually, you go to Lenta to buy products, so the price of products is okay. It's the price of product. But in order to be able to buy these products in a hypermarket, you have to incur costs to pay for fuel, to use your time, etc. Guys, do you understand it, ladies and gentlemen?
Yeah.
Okay,
Yes.
great. Okay, so in order to reduce transaction costs, what companies do? They implement automation, so they replace living workforce, so to say, by robots. They use distant access, so they replace traditional offices by web apps and websites. They use biometric authentication instead of traditional authentication, etc. It helps to reduce transaction costs. Okay, in order to be more competitive on the market, traditional financial institutions try to offer a higher level of services. For example, by distant access. Thanks to distant access, obviously, you don't have to go to the physical bank office. You can during its working hours. You can get a financial services anytime you wish. So obviously, it is a higher level of services, or at least a higher level of comfort for customers. And obviously, they want to offer new products and services. For example, robo consulting or robo advising. Guys, we have already discussed it. What is the goal of traditional financial institutions in the field of digital finance? Reduction of costs, higher level of services and higher level of customer comfort, and extension of product range. Sometimes these concepts are combined. So, in case of robo consulting, we simultaneously offer a new service, sorry, but we also reduce costs because we don't use professional consultants to inform our customers about good investment decisions. So let's go further. Non-traditional financial institutions. Ladies and gentlemen, I will go back. Non-traditional financial institutions, it is the upper right part of the matrix, Tinkoff and Kickstarter, just to remind you about it. So they are genuine fintech companies because they combine both financial and technological innovations. They have no traditional elements in their activities. At least the number of such elements is very low. They offer new products and services, crowd lending, robo consulting, etc. But not necessarily. Tinkoff, for example, doesn't offer new products, but still, it has no traditional elements in its activities. It exists only in the virtual space. Okay. These companies, in most cases, cooperate with other stakeholders in virtual business environment, internet via apps and websites. Ladies and gentlemen, you should clearly understand that fintech companies, real digital finance companies, are non-traditional financial institutions. Financial institutions that are specialized in the field of finance, but that are non-traditional, that replace traditional business models, but by new virtual digital ones. Okay. Traditional and non-traditional, non-financial institutions. It is, let's go back, guys, to our beautiful matrix. It is the lower line of the matrix. Samsung as a traditional company and FinTech as a non-traditional company. So they include financial and technological innovations in their business models in order to increase effectiveness of their main business. Increase cash inflow from customers, payment services, for example. So it is exactly the model of contacting. Okay, obviously, in case you pay via a social network, you have to pay a commission. So in this case, you increase the cash inflow from your customers. Increase profits, debt services. So in some cases, it is not about profits actually. It is about increasing cash inflow. So debt services can also be used to promote sales, as it is the case of Ozone. But sometimes, if you charge an interest, okay, in this case, you will obviously increase your profits. Raise money. Raise money. Okay, ladies and gentlemen, what do you do in this case? Okay, your initial coin offering will not discuss this concept because it is about, okay, now it has almost disappeared from the market. But okay, you can ask your customers to pay money in advance. It is exactly what Starbucks is doing. Starbucks, as you probably know, it is the most famous coffee company in the world. So if you pay in advance, okay, you can open an account with Starbucks, and you can put some money on this account. This amount obviously should be pretty big, so it doesn't cover just one purchase. In this case, Starbucks obviously gets money from its customers, which can be used to finance different projects, etc. So obviously it is a kind of pre-sale because customers will be used this account to pay for coffee. But as you understand, this money will not be spent instantly. So a company can use this money for a long period of time. It means that raising money can be used to increase the efficiency of non-financial institutions, and obviously, guys, increase loyalty. All these programs, raising money, debt services, payment services, etc., they are in most cases linked to different loyalty programs. To put it simply, for example, Starbucks is raising money from its customers. Obviously, it pays no interest to its customers, but you can but obviously, if you pay in advance, you get some cash back, but not real cash back. You get some points with a loyalty program, and if you get a sufficient number of such points, of stars, as Starbucks calls them, you can get a free cup of coffee. So it supports loyalty, obviously. In case of Contact, which uses its payment service, okay, what is the loyalty? In this case, if you need to pay your friend in Contact, for example, for a handmade product, you don't have to switch to a bank in order to pay. You can pay via Contact, so remain within the social network. It also increases loyalty. It increases the time you spend within this social network. Guys, do you understand it? Ladies and gentlemen, is it clear?
Yeah.
Okay, great. So let's continue. So the goal of traditional non-financial companies, as I have already said, is creating an ecosystem with a broad choice of services. So setting up including financial services into their product range means that they create an ecosystem with a broader range of products and services and customers are able to use not only the basic products of these companies, like just products in case of Ozone, or telecom services as in case of Megaphone, for example, customers get access to financial services. So it is about ecosystems. Again, guys, what is an ecosystem? It is a wide choice of different products and services within which a customer can satisfy almost all his or her needs. So, thanks to inclusion of financial services into such ecosystems, okay, companies simply develop their ecosystems. That's all. Okay, you should understand that in many cases, non-financial institutions do not have their own financial infrastructure. For example, Vkontakte has no financial infrastructure. All payments are processed by VTB24 bank. What does it mean? Non-financial institutions operate as interfaces for financial services. It means that Vkontakte acts as a reseller of VTB24 financial services. So the participation of this social network on the financial market is actually based on a close cooperation with VTB24. When you use Vkontakte to send a payment, you get an idea that that you're a customer, that you're a financial customer of Vkontakte, but it is not so. You indirectly use VTB24 financial infrastructure. So it means that non-financial institutions, in some cases, do not have their own financial infrastructure. On the other side, financial institutions, banks, for example, do not always have digital outlets for selling their products. Obviously, they have their own websites and apps, but it is not enough to cover all potential audience. So, on the basis of cooperation with social networks, with telecom operators, etc., banks get access to the digital audience, so to say, and they also become a part of the digital market, of the digital finance market, of the finance market. Guys, do you understand it? Ladies and gentlemen?
Yeah.
Okay. Okay, so let's continue. Ladies and gentlemen, what are the trends of evolution of the digital finance or fintech? Well, we have to understand that traditional financial institutions include elements of fintech and their business models. No traditional financial institutions will be able to survive without digital finance technologies. Because now customers will not simply cooperate with financial institutions that do not offer digital possibilities. Let's remember Sberbank. Sberbank started its activity as a traditional financial institution, but now it is a financial, and not only financial, it is a general ecosystem with a very high level of digitalization. So, you should understand that traditional financial institutions will combine traditional and non-traditional digital elements in their business models. Traditional financial institutions are mostly interested in technological innovations, so they want to increase the efficiency of their products on the basis of technological innovations. Non-financial institutions, both traditional and non-traditional, become more financially oriented in order to be able to build ecosystems, in order to be able to satisfy all needs of their customers. But ladies and gentlemen, you should understand that it is also true for financial institutions. But if non-financial institutions turn financial, if they include financial services into their range of products and services, in case of traditional financial institutions, the situation is different. Traditional financial institutions include non-financial elements in their ecosystems. Again, let's go back to Sberbank. As you know, Sberbank offers a lot of services which are different from their core financial business. For example, let's remember Sber Market, just a platform for sales of food and other products. So, both financial institutions and non-financial institutions are interested in building ecosystems. Non-traditional financial institutions emerge. They combine financial and technological innovations, so they create new financial products like crowdfunding, for example, and that use technological innovations, for example, existence in the virtual space. So Kickstarter is a good example of a non-traditional financial institution. Guys, do you understand it?
Yes.
Okay. So let's continue, guys. Let's continue. Okay. What is the future of financial of the financial industry in general? Ladies and gentlemen, we have three main questions. Will traditional financial institutions survive? Will fintech models survive? Are fintech models popular for long period of time, or they are in hype right now, but they will not survive in the future? This question is not so simple as it may seem, because, okay, as in case of digitalization of banks, it is pretty obvious that the digital banks will survive and will dominate on the market. In case of cryptocurrencies, it is not so obvious. Cryptocurrencies started as a great challenge to the traditional financial system. They were intended to replace traditional money, but as you probably know, their success was very limited. The hype ended 3 years ago, and now, now virtually everybody forgot about cryptocurrencies. So the initial model of cryptocurrencies did not survive. And okay, if both traditional and new financial institutions survive, how they will coexist? Okay, ladies and gentlemen, we have already partially answered this question. We know that traditional financial institutions will include digital elements in their business models. Most probably, non-traditional financial institutions will include traditional elements, so they will combine both traditional and non-traditional elements in their business models. Okay, but first of all, let's understand the advantages of traditional institutions and digital financial companies. Okay, in case of traditional institutions, the core advantage is infrastructure, obviously. Traditional banks have a lot of outlets throughout the country. So they have a developed financial infrastructure. So they are able to offer a wide choice of products and services. Obviously, thanks to their long history, traditional institutions have a huge level of competences in the field of finance. They have strong brands. As you know, traditional banks, traditional insurance companies, etc., they have strong brands which helps them to enjoy a high level of loyalty and high level of protection of customers. Okay, ladies and gentlemen, despite that the financial institutions do not care about customers, they care only about profits, still they provide a high level of protection of customers due to the very strict regulation. In case of fintech, the advantages are lower cost, because okay, they don't have traditional offices, they do not have living personnel, etc. They have easier access. What does it mean? Okay, you contact fintech companies via internet anytime you wish and from anywhere. So they can be easily accessed anytime. And a lack of legal regulation. Guys, it is an advantage. In some cases, it may be an advantage because a lack of legal regulation means that there is a certain freedom in cooperation between customers and fintech companies. Fintech companies may allow you to do something that traditional institutions cannot due to the legal regulation. Well, in case again, let's go. In case of traditional institutions, you have a very limited choice of tools of finance if you start a new project. Mm, and these products are pretty formal. In case of fintech, it is not so. Crowdfunding is very informal, which simplifies its use both by backers and initiators of projects. What are the disadvantages? In case of traditional institutions, the disadvantages are high cost, obviously because the infrastructure should be paid for, and high level of regulation. Mm, Traditional institutions cannot use all opportunities which are open for fintech companies. In case of fintech, the disadvantages are the low level of protection of customers because, okay, there is no precise regulation for fintech, and this is why conflicts cannot be solved easily. Lack of specific competencies. Fintech companies, in many cases, start as technological companies, and they are working in the most profitable sectors of financial industry. They lack competencies necessary for development of financial services, which are more technical. For example, for mortgage credits. And they may have a low level of technical protection, so they may be attacked by hackers. Ladies and gentlemen, as you understand, traditional institutions can also be attacked by hackers, but traditional institutions may invest more money thanks to their higher scope. They may invest more money into development of cyber protection. These disadvantages of fintech and traditional institutions, as well as advantages, clearly demonstrate that fintech companies, digital finance companies, and traditional institutions should coexist because they can combine the advantages and they can eliminate, at least partially, the disadvantages. It is exactly what we said, guys. The main way of development of financial industry is the combination of traditional and fintech tools and business models. Ladies and gentlemen, now what about innovation in case of digital finance? There is technology. What is technology? Okay, technological tools which are used to develop new products, to develop new concepts. Organization, so new models of interaction between different stakeholders. And products, new ways of creating value, of delivering value to customers. Let's analyze how these factors are combined in different financial institutions. Okay, a company may offer a new product, or it may offer a traditional product. A company may be innovative from the point of view of organization or technology, or it may be a traditional company. Ladies and gentlemen, an innovative company offering a new product. It is a genuine fintech again. So you are an innovative company from the point of view of organization and technology, and you create a new product. Okay, it is innovation-based fintech, Kickstarter. Okay, it exists in the internet only. It allows for direct interaction between backers and initiators of projects, contrary to banks which are mediators. And okay, they offer a new product, crowdfunding. An innovative company may offer traditional products. Ladies and gentlemen, it is quasi-innovative fintech. Tinkoff, guys. Tinkoff is often described as a very innovative company. Indeed, it uses virtual space to promote its services. It has no physical offices, etc. But from the point of view of the product range, it is a pretty traditional bank. All products offered by Tinkoff are traditional, loans, cards, etc. So products are traditional, but the company is innovative. So it is a quasi-innovative fintech. It is the transformation of traditional products into a new form. That's all. A traditional company may offer a new product, ladies and gentlemen. In this case, it is not about technologies. It is about, okay, it is not exactly about the development of company. It is about the development of products. It is a quasi-traditional financial institution. In this case, we have a new product offered by a traditional company. Guys, have you ever heard about Halva card, which is present here on the Russian market? Do you know how it is organized? Ladies and gentlemen.
No.
Okay, I will explain to you a little bit later. Guys, if you don't mind, we have 3 or 4 slides for this presentation. So if you don't mind, I will work without break. I will continue without break so that we could finish a little bit earlier. Do you agree, guys?
Absolutely.
Okay, great. So, and we have traditional financial institutions. In most cases, they are local banks, which are pretty traditional. They offer traditional products and they operate as traditional companies. So, what about Halva? Guys, what is a traditional credit card? Here you see a description. We have a customer who is interested in buying a product in a store. I don't know, a car, for example. Okay, car is too expensive. I don't know what you can buy by credit card. Okay, a computer. So you go to a store and you pay a computer by your credit card. It means that you don't have your own money to pay for this computer. The money is provided by a bank. So the upper arrow demonstrates financial relations between the bank and the customer. Banks provides customer with money, and the lower arrow demonstrates the cooperation between the customer and the store. Customer pays for the computer, and the store delivers him or her this computer. Obviously, after this, the customer has to pay back the full amount of money to the bank, and not only the full amount of money, but also the interest. So, we have 2 relationships, so to say, financial relations between the bank and the customer, and commercial relations between the customer and the store. Bank and store do not cooperate, no cooperation at all. Guys, do you understand it?
Yes.
Okay, great. In case of Halva, in case of Halva, okay, it is probably the most known product, the most promoted product on the Russian market, but other companies also, Halva payment card is proposed by Sovcombank, but other banks also propose similar products. For example, Alpha Bank, if I'm not mistaken, proposes вместо денег payment card. What is the scheme of this payment card, guys? Okay, here we have an additional arrow. What it means? What it means? In this case, banks provide the customer with money, and the customer pays the store for the product. Okay, at this level, the situation is pretty similar to the traditional credit card. But after this, the customer has to pay money back to the bank. Again, very similar to the traditional credit card. But the rounded arrow on the right demonstrates an additional relation within this system. The interests are paid by the store, not by the customer. So the customer pays only the price of the product. The credit given to the customer by the bank is equal to the price of the product. And the customer pays back to the bank only the price of this product, no surplus. The interests are paid by the store. Guys, do you understand this model? Ladies and gentlemen.
Yes.
Why this model is used, guys? Why this model can be implemented? Let's go back to the traditional credit card. Well, in case of this model, the customer pays both the initial amount of the credit and the interests. Why? Because the customer is interested in buying the product, and the customer has no money to pay for this product. So the customer asks the bank for a credit, and the customer is ready to pay interest because the customer, as I have already said, is interested in buying the product. What is the situation in case of halva payment card? In this case, the store is interested in selling its products to the customer. Obviously, the customer will not be able to buy this product if he or she has no money to do so. But the customer is not eager to pay interests, and the store compensates the bank for the finance which the bank gives to the customers for purchase of these products. So the store gets a profit from selling products, and this profit is shared with the bank. Guys, do you understand this model?
Yes.
Okay. So it is a new model of cooperation between three key stakeholders of the credit purchase deal between the bank, the customer, and the store. So the interests are paid by the store. So guys, here we see a new product, It is not a credit card, it is a payment card. In English, it means buy now, pay later. In Russian, as you probably heard, it is called карта рассрочки. This model creates a new model of cooperation between these three key stakeholders. So it is indeed a new product, but it has no specific technological features. It is just a new product offered by a pretty traditional bank. What is the specific features of this payment card? Pre-selection of stores. Ladies and gentlemen, if you use your Visa or MasterCard credit card, okay, you can use this credit card in any shop which accepts Visa or MasterCard payments. In case of halva, the situation is different. A store should agree to pay interests instead of customer, obviously. The bank should pre-select stores which will participate in this program. The bank should get the approval of stores for their participation in this program. So not all stores will participate in such a program. So halva payment card is operated, I don't know precisely, by MasterCard or Visa. But okay, Visa and MasterCard ensures only the processing of payments. But halva program should be approved by the store. So there is a need for preselection of stores. And ladies and gentlemen, in case you use your credit card, your normal credit card, I mean, you will have the same terms for all stores. I don't know, 50 days of grace period, etc. In case of halva payment card, the situation is not okay. It is pretty different. Different terms of payment may apply for different stores. Some stores may give you a longer period of payments. Other other stores will give you a shorter period of payments or a shorter period of payments, etc. So different terms of payment may apply for different stores. So, ladies and gentlemen, it is not only a payment card, it is also a marketing tool, so to say, because it is a kind of loyalty card, so to say. Because if you have a halva payment card, you will try to go to stores which participate in this program. So it is not only a financial card, but it is also a loyalty card, if you understand what I mean. Guys, is it clear to you?
Yes.
Okay, great. Okay, so what is the possible future of the financial industry? Okay, ladies and gentlemen, most probably traditional institutions and fintech will coexist within one company. So in this case, we will have an inclusion. Sberbank is a very good example. or a partnership. A partnership, it is a case of Contacti and VTB24. A bank and a digital company establish a partnership. Obviously, traditional institutions will have to include elements of fintech in their business models. Obviously, it is crucial for them to survive. Digital elements should be present in the business models of all financial institutions. Okay, obviously, there is a need for regulation of fintech. Ladies and gentlemen, you should understand that this regulation may lead to disappearance of some products if regulators decide that these products do not meet needs of customers, or these products are dangerous for the society. It is the case of cryptocurrencies, unfortunately. And here we have the cryptocurrencies. Future of mass promising fintech products like cryptocurrencies remains unclear. So nobody knows what will happen to cryptocurrencies. So what we have now, guys, we have a digital transformation of financial institutions. Traditional banks turn digital, neobanks appears, etc. But genuine fintech products like cryptocurrencies are unclear. Nobody knows what will happen to them. Okay, guys, that's all I wanted to discuss with you today. Do you have any questions? Guys?
I think now everything's clear.
Okay, ladies and gentlemen, thank you very much for your participation. The seminar for my group will take place at 1 o'clock at 1 p.m. So now I thank you for your participation. As I have already said, it is our final meeting. Guys, I thank you very much for your participation in my lectures. Thank you very much for your questions, for our discussions. It was very interesting to me, and I hope it was fruitful for you. And ladies and gentlemen, I wish you, okay, well, in advance, actually, I wish you a very good new year, and I wish you all success in the future. Thank you very much, guys.
Thank you
Thank
too.
you so much.
Thank you.
Thank you.
Thank you. Question, but not about the lecture. Can I ask?
Could you please repeat? I don't hear your question.
I have a question about did you received our project? We are 8th group and we don't know if we have a right email.
Camila, sorry, I didn't ask for you. Of course, I got your presentation.
Oh, okay.
I resent it to your opponents. I'm sorry, I didn't confirm your letter. I did not acknowledge receipt of your letter. So
Okay, thank you.
sorry.
Thank
Okay,
you.
more questions? Ladies and gentlemen, thank you very much again. Probably we will meet in the future, but for the time being, that's all. Thank you very much again. See you. Bye-bye.
Goodbye, thank you.